أهلا بكم إلى هذه المقابلة الخاصة مع داليو مؤسس Bridgewater Associates. Mr. Daliu, founder of Bridgewater Associates that has become the largest hedge fund in the world, an economist, an author, a philanthropist. Thank you for joining me in this interview with الشرق Business with the Bloomberg. It's an honor and a pleasure to have you with us today. As a global macro investor for 50 years, you have studied what has happened in the past to gain an understanding of our current times and what could possibly happen in the future. You have studied 500 years of history and you have found that there's a confluence of factors, 5 forces that shape our world today. What are these 5 forces and what is their significance?
Well, the 5 forces are pretty much 5 cycles that they transpire. And the first is, we know the debt money cycle, right? You give people more credit, that's their buying power. And then that credit turns into debt, there's too much debt, and then that debt has to be paid back and it creates a cycle, right? And so the debt cycle that's going on now is a very big cycle, the debt money cycle. What is the value of money and how much debt? That's number one. So that drives markets, it drives economies. The second force is the internal conflict or peace force, right? Harmony or conflict. And so what we have now is irreconcilable differences. We have populism of the left and populism of the right that are at war, and that we do not any longer have the same sort of compromise. And so we see that big force, the political internal conflict force. The third force is the great geopolitical conflict. The rise of a great power, challenging an existing great power, and challenging the world order, the way the system works. It no longer works with the United Nations and the IMF in the same way. There is greater conflict internationally that we see. The fourth force has always been acts of nature. Droughts, floods, and pandemics have killed more people than wars and have also had big geopolitical. They've toppled order. So we certainly have climate change as a factor. And then number 5 is technology. Always, man's inventiveness of new technologies has had a transformative. So when we look at these 5 forces, enormous changes in technology that are going to take place with AI. So those 5 forces are working together. They have effects on each other, and that creates the dynamic that we're in.
All right, let us dissect these forces. When we talk about the debt money problem, how concerned are you, Ray, about the current debt scene in the United States now with a Republican Congress and Trump in the White House? We are probably going to experience expansionary fiscal policies intertwined with the loosening monetary grip that has already started. How concerned are you about the debt problem there?
I'm very concerned. The government debt is right now an enormous burden. We are used to selling a lot of debt, and the world has acquired a lot of debt. So more debt than they care to hold as a diversified portfolio. So you have to view debt and money as a medium of exchange and a storehold of wealth. Now it's becoming threatened as a storehold of wealth because the amount that has to be sold is very large relative to the demand to buy it. And so that situation creates a very precarious situation. If you have a situation where those who are holders of their existing debt don't any longer get a return that's high enough, then you will get a selling of that debt. Should you have a selling of that debt, which is a reasonable probability, then you're going to have a big supply-demand imbalance. That puts central banks in the position of either seeing interest rates go up a lot, which will curtail credit and spending, or the need to print money and buy more debt, and that monetization will go down. So we're seeing that reflected in the gold price, we're seeing it reflected in crypto price. The value of money as a storehold of wealth, the value of a debt asset as a storehold of wealth is being called into question. Will become, in my opinion, very much more risky.
Will this exacerbate the scene, do you think, in the US?
I think we have too many, the world has too many expenses relative to its resources. You know, we're now dealing classically, like the 1930 to 45 period. We're in a period that's very similar to that, where we not only have the economic demands, but you have the political and geopolitical demands. Socially, there's a need for more money. And then militarily, there's a need for more money. And then climate is a very expensive proposition. It's estimated that it would be about $8 trillion a year in costs in one way or another. $8 trillion a year is 8% of world GDP. So it becomes the need for more money. And then how that money's distributed, of course, is key. So you're seeing the wealth conflict related to how that wealth is distributed as being a political factor. Yeah, it's going to be an issue.
So that is when we're talking about the US, talking about the global economies, when we talk about Europe, China, and emerging economies, all of those countries and economies have spent a lot during COVID and post-COVID in order to revive growth. And this has led to more debt, which has been even more of a burden with the strength of the dollar. How concerned about a global debt problem are you?
It's pervasive. You think about Europe. Europe has too much debt, and it doesn't have enough money, and it has military demands, and it has social demands, it has an economy that's suffering. So it has a problem. China has a problem. Japan has a debt problem. This is, I think, one of the important things to understand, because I think that people think, is the dollar going to be better than the euro, better than the yen and so on? No, this is an ugly contest. They are all facing these types of problems. And history shows that they depreciate them together. And so that's why you see gold, you'll see other assets going up in terms of the demand, because the real question, interesting question, is what is a good storehold of wealth money? And I think that that question is going to come more to the surface over the next few years.
So before we move into the second force, do you think this question is what has led to the surge and the price of crypto currencies, specifically the Bitcoin, in the latest, the last few weeks?
Crypto and gold, okay? Where is a safe storehold of wealth? Holding bonds, even in this politically charged environment, the worry of sanctions and so on, has changed the nature of what is a safe money storehold of wealth. In other words, not only a storehold of wealth, but something that can be moved from country to country and is recognized across countries as a medium of exchange and a storehold of wealth. That has been a source of demand for those types of assets, as there's been a pulling back from dead assets.
All right, now if we move into the second force and internal fighting, now with the Republicans having the grip on both chambers of Congress and the White House, are you concerned about an internal, let me call it conflict instead of fighting in the US come January?
Well, I think we have to realize that we are no longer in an era of great compromise. Democracy, as we understand it and have experienced it for most of our lives, we are now in a win at all cost. So there is a type of war that is taking place in terms of achieving what the Republicans want to achieve, which is a more efficient government, a more capitalist type of approach, a more business-like economic environment. And that's taking place also by necessity in a world that is more threatening. Capitalism as we know it is not going to be the same, because when you have a world at war, in other words, the United States and China having the conflicts, then geopolitical considerations enter into it. What are we going to do about directing chips industry? In other words, self-sufficiency in things like high-end chips. The goal to set 20% of its production in the United States for geopolitical reasons. This is all top-down. So now you have the fight between the one side and the other side. I think that the Republicans are in a dominant position, and you're going to see those great changes. But this isn't true just in the United States. What we're seeing in France, Germany, Japan, Korea, North and South Korea. What we're seeing all around the world is this same type of conflict. The rich, the poor, the billionaires, the haves, the have-nots, and the different ideologies in terms of capitalism versus socialism or communism. We are in that kind of a war environment.
I will get more into into Europe and the Middle East, but I want to touch upon the U.S. more at this point. We see a lot of critique of the Trump administration even before it has started its work. Are you concerned that we can, or we might see, I wouldn't call it a revolt, but a rebellion from some Democrats along the way? During the next 4 years, you have witnessed many administrations throughout your lifetime. Has it been as such in any administration before or in any era before?
I think we're in a time where the Democrats will largely play by the rules. Well, we'll see how this goes, but will largely play by the rules. And the rules and the way it's set up are really set up mostly for the Republicans. And so I don't think that they have a strong hand.
All right, so now let's follow up on Europe and the conflicts. So a plethora of economic and political challenges, migration pressures, and the increasing political polarization, especially in France. We've seen that in Germany and across the board in several European economies and countries. How will this impact Europe's ability to thrive, especially that it is under a lot of economic and financial pressure at this
I
point?
think, again, Europeans should reflect on the most analogous period in the past, which was the 1930 to 45 period. In other words, when there's economic problems and that there is great polarity between the left and the right. And we see this emerging when you have now issues that become defense issues and coordination issues. So you have economic issues, the decreased competitiveness of Europe in terms of both the capital markets, but also the production and industries. There's an economic suffering from that. At the same time as there's a debt issue, at the same time as there's a need for growth. And so these competitive issues, these military cost issues, all of this, and the fragmentation that's taking place around these issues, what to do about it, is very much like that 1930 to 45 period, I think, that great internal conflict. And so I think it's probably likely to worsen, not to improve.
Hopefully the 1930 to 40 period with what it held from wars won't repeat itself.
You know, as
Let's
they say,
hope so.
as Tom, history rhymes, doesn't repeat exactly, but the circumstances is not a circumstances of prosperity, harmony. We'll talk about how the world is changing and how the different places where there is harmony and productivity, how that is changing. But circumstances are such that it is these conflicts are real and they're costly.
Speaking of conflicts in the Middle East, a lot has happened over the course of the past year and a half. We have a lot going on in the ongoing war in Gaza, the war that just finished in Lebanon, and let me call it a fragile stability there. The regime change in Syria overnight, yet we have resilient Gulf economies still tied largely to the fluctuations in oil prices. To what extent, Ray, do you think the five forces shaping and influencing the region's stability and economic futures at this point?
Well, in any region, you can't make a stereotypical analysis of the region. You know, in Europe, Switzerland is very different from Greece, for example. And so that's true in this region, right? What you're seeing is a renaissance, a beautiful development in Abu Dhabi. Here we are in Abu Dhabi or in the UAE, and you're seeing it in Saudi, and you're seeing it in the Gulf countries, in which it's the exact opposite of the circumstances that I'm talking about. In other words, here there is harmony, there is a civility, there is a productivity, there's a vibrancy that you can feel. That's why people from all over the world are here today to not only just take advantage of the riches that are here, but the riches of the environment. That's why they want to move here. That's why they want to. I have a son and his wife who live here, and the school that my grandchildren are going to is a wonderful school. All of that basics. You know, it's the basics that count, right? What are the basics? Do you raise your children well? Do they become well educated in terms of not only their capabilities, but their civility? Do you come out to a country where there's civility and people are working well together and there's vibrancy and to make great things happen and so on? So you're seeing this in these places now. And so that because the contrast is so great in some of the other places. New York is not the same, Chicago, Los Angeles, London is not the same. So you're seeing this change. Throughout history, when there's a period of great conflict, such as war, in the war, at the end of the war, there are the winning countries, losing countries, and the neutral countries. The winning countries lose. The losing countries, terrible. And the neutral countries all the time through this do better. So there are elements that stand in contrast that are attracting people here and are attracting businesses to do good deals together.
فاصل قصير ونستكمل حديثنا مع داليو مؤسس Bridgewater Associates. Now let's talk about the rising power. China has become a global power in the over the past 20 plus years. What will this mean to the new world order? And what are the current economic challenges, with the current economic challenges that China is facing? Does it still have a chance to shape the global scene? And if not China as the other power, who can serve that role?
China and the associated allies will always be very strong powers. If you're dealing with many of the issues like technology and like, there is only one competitor, and that is China to the United States. So there's a great power conflict with the United States and with China. And China has also its very serious problems. Its very serious problems include its debt problem, and then there's internal conflict problem, and then there's the issues of the geopolitical war. So now we're seeing a game being played, right? In other words, what is the region? Where will it be? So for example, for China, exports to the United States or exports to Europe will be more threatened. But the shift will be more to the third world. 85% of the world's population is in the third world. And then what are the areas that they'll be competitive in? Much more in manufacturing, high-end manufacturing. So you're going to see a shift in the playing of that game. And of course, both countries recognize that they are threatened by the other country, which creates that tension and that geopolitical. Now, hopefully, and I would expect that that won't cross the line into some major conflict, but it is a risky situation. So we do have that geopolitical war. And then if you're in whatever region, then it's a competition. How much money do you bring? How much benefit do you bring? What are the cost of the items that you have to sell and how competitive it is? That is the nature of that dynamic.
So with that in the scene currently, and with the BRICS nations gaining the momentum on the global economic scene as an economic power with those big economies, could this signify a tipping point into a more multilateral world order, Ray?
We are in a more multilateral world order, right? It used to be, after World War II, 1945, an American-dominated world. The Soviet Union never had much economic power. And now we're seeing that split up. Now, I'd say in terms of, let's say, BRICS countries and emergence and currency, it's important to distinguish currency as a medium of exchange and a storehold of wealth. It's not likely that as a medium of exchange, I think we're going to see a lot more movement in that direction. But as a storehold of wealth, I don't think you're going to see those countries find a way of being able to deliver that as a storehold of wealth. And that's why I think when we still think about what is the money-like storehold of wealth That is the big question for assets. And what will interest rates be? That is the big question for all us.
So the concept of a common currency is, in principle, not possible with different central banks in those different regions. But do you think the concept of a common trading currency is possible?
Yes, for transaction reasons. There's no good reason that countries that have trade with each other shouldn't be having most of that trade denominated in a common currency, but whether they will hold it as a storehold of wealth in a bond or something, I think that we're a long way from there. There's not much trust in those currencies either.
Now let's shift into the one of the major forces that you talk about, and that's technology. So considering the rapid expansion of AI capabilities, how do you see this technological surge influencing the global power structures at this point, especially that the major companies doing the big changes in AI are basically American, Chinese. We have some power with the TSMC in Taiwan and ASML in the Netherlands, but apart from that, it's all concentrated in the US and China. How would this influence the global power structure?
Well, there's design it, and then there's manufacture it, and then there's trade it, So in the global economy, the great designers of it, as you point out, particularly the Americans, although a lot is being designed in China and not much anywhere else. In terms of produce it, as you point out, the producing it is particularly difficult in the United States or other places. It's a complicated thing to produce. And so that's going to be a big geopolitical issue. And then there's the use it and how that will trade. All of that is coming. I think that we're now in the process of having two independent systems because of that need for security and that. But I think it's going to be the biggest impact that any technology has ever had because it's all thought. Okay. In other words, if we look at the Industrial Revolution and the steam engine and many different things that have changed, moving from manual power to machine power and all of that, tremendous changes. But this is bigger than any of those changes. And this has an implication not only in terms of potential productivity, but it has enormous implication for peace and war. This can be used for war as well as peace. And it has enormous implication for employment because it will be used to replace people, and it'll be used also, it'll create incredibly wealthy people.
So this is the ethical part of AI that I want to discuss. Do you think it's going to be more of a constructive or a disruptive force for the world order?
It's all of this comes down to how people are with each other.
Given the nature of humankind?
It's human nature, right? In other words, we can use this for war. We can use this, all kinds of war, okay? We can use it for great advances. And when there are unicorns that come along with great achievements, and at the same time that there's replacing people, a lot of people in areas, will that be dealt with wisely? Or how will that be dealt with? So we're going to have this big question of how we deal with each other pertaining to all of these things.
The part regarding produce it, do you think conflicts will unfold when it comes to China being able to reach and have hands on the latest technologies, although they have put a lot of effort, money, investments into that, still they are still far from what the US has achieved on that front?
In terms of the the high-end, most powerful chips, they're behind on it. But in terms of most chips, cost-effective chips, they're ahead on it. So I think you're going to see embedded in a lot of manufactured goods, high-end manufactured goods, you're going to see excellent chips. And so the products are going to be very, very effective. But you can't fall behind on the most advanced chips because they're so important, not just in commerce, but also in war. So much more important that profits may not be the most important consideration. Mm-hmm. We're having the super scalers do this, and everybody's assuming that it'll be great profitability for the superscalers because these are amazing technologies. But I've seen in history over a period of time, when something is more important than just profits, like we're seeing in a number of the technologies of solar and wind and battery technologies and so on. It may be that you produce so much and there's so much need for this that it may not be profitable or as profitable. I think that what we're going to see is the great users of this. And it doesn't have to be the most high-end chips, but the real question is, are you using it? Are you radically changing your own businesses? Mm-hmm. Those that are radically changing their own businesses to improve profitability, I think, are where the great financial potentials are.
So speaking about all those investments and all the use of AI and technology, the GCC countries are making significant investments in that field. We've seen Saudi Arabia launch a $100 billion AI initiative, and the UAE, Abu Dhabi's Artificial Intelligence and Advanced Technology Council has launched MGX, which is a dedicated AI investment vehicle with an ambitious also $100 billion USD fund. So will this be enough to position the UAE and Saudi Arabia as leaders in this transformative field?
They are already
leaders.
Yes, and I think it's very smart. It's smart in two dimensions. Investing in AI and leads one to acquire an understanding, and that means of using it itself. So you get the double-barreled effect of being an effective user of AI, which makes you competitive in the world, and also an effective investor. I think it's very, very smart. And it helps to make these places magnets for people like myself and who are investors all over the world. This is an exciting place to be because of the things that they're doing in that area.
So now let's talk about the Great Powers Index that you have established for predicting growth, and you have identified metrics to assess the health of economies and countries and what leads to succeed or to these countries to succeed or to fail. In that framework, I want to discuss with you, Ray, the countries in the region that have undergone rigorous structural changes to diversify their economies away from oil dependence. Do you consider what has been so far is enough and has established the countries enough to rise on this Great Powers Index?
Yeah, so the Great Powers Index is simply a health index that measures all different dimensions: capital expenditures, education of the population, all different measures to show, first of all, how healthy they are, and then it does the correlation with the subsequent 10 years growth rate, so it's a good predictor of that growth rate. And what you're seeing here is a tremendous transformation that's shown in that index. So for example, the UAE has the second fastest projected growth rate next to India in terms of the amount of growth that it's expected over the next 10 years because of capital formation, because of the openness to this new thinking, the rates of change, the financial condition of the country. In other words, it's financially sound. Financially sound, education, environment that's good to do business. These are the things that make it. And also being neutral in a world that's in conflict. These are all big pluses for the region.
Now let's speak about Ray Dalio as an investor, an economist, and a philanthropist, and the author. Today there's unlimited access to knowledge, to technology, science, but there's immense competition, and not only in one's own region, but global competition. Versus when you started 5 decades ago, there was limited access to technology. Reaching knowledge was time and effort consuming, yet there was ample opportunities to grow and to compete. What do you think is an easier recipe for growth today versus then? And what lessons have you learned throughout those 50 years? What lessons can you give to those young investors? And I would like you also tell me about the investment strategies. Have they changed between then and now?
Okay. In some ways they're the same, and in some ways they're different. And I do want to give the advice. I started investing when I didn't know what I was doing, but I started when I was 12.
Oh, wow.
And I would, Fortune would have the Fortune 500, and in the Fortune magazines, if you checked it off, I would get the annual reports and I would do my research and I would play the game. And so for any investor, the thing to do is get in it, play the game, and get your information. Now the information's so much easier. The thing that I did, which was so invaluable to me, and that I encourage everybody to do, and I'm including encouraging institutional investors to do, is to write down their criteria for making decisions. In other words, when I think I want to make that decision, rather than just making that decision with no historical sense of things, write down that and then see how it would have performed in history. Because then you have a track record. You're executing a game plan. So every time, and I do this for life and work, write down the criteria you're using and have your principles, as I call them. And then once you have that, you can today automate that. You can today make a machine that works with you. It's like if you're a chess player, you can make a chess machine that plays with you, and it makes a move, you make a move, and you see how that is operating. That's what you can do today. I'm at a stage in my life, I'm 75 years old, and my number one goal is to pass along anything I have that's valuable. This is my goal. And in terms of trying to teach, so I teach, I do a course and so on, and I've created what I call a digital ray. Now this digital ray has all of these criteria in it. And anybody can go online now, and we're doing the beta testing, and you can have an exchange with it. So to be able to think, how do I get the best information? How do I learn? How do I have that communication? You can do it with digital ray, and I put out courses. The ability to be able to learn and have a thought partner in doing your execution, a thought partner that you find very valuable because you're working with, exists today. That is where the power is. We're now shifting, for all institutional investors, even the smartest, we're shifting from an era in where they think it's in my head. I'm a great decision maker and I can do it in my head. That's obsolete. We're now going to an environment in which, okay, you have to not have it all in your head, weighed in that art, but you have to have it in the machine operating that way. So you can take your thinking, you can study it in the past, you can make the game plan, it could all make sense to you, you can put it into the computer, and you can operate in parallel with yourself. That is where we are, that's where we're going.
So with all of that, it's easier to take decisions now and to invest now versus 50 years ago.
I think the game always makes advances. Is it easier to compete in the Olympics now? Okay, no, but all the players are better. Okay? Yes. All the players are going to get better. It's a zero-sum game. So you have to be the best player in that game, and so the way you play it is different. You use the best technology.
Thank you so much for this talk. I really enjoyed it, and I'm sure all of our audiences will enjoy listening to this thoughtful conversation today. It was a pleasure having you with us, Ray, and it's always good to watch your videos and to read your latest on all of those principles. Thank you so much for having me.
Thank you for having me.